What's up, everyone? Welcome to the daily macro update for Thursday, October 9th. Stocks, not really happening too much here, but we're seeing that the dollar just surged to bullish trend over the past couple days, which is a new development. Yeah, I mean, there's nothing really much that happened today except for a quick drawdown, quick correction from gold miners, not so much silver, but silver miners. So pretty much what has rallied so far this week is just having a correction from that. I was buying a little bit of, metals, precious metals, as well as metal related miners. But that's really what I started buying, and that was about it. Not really touching crypto too much. I don't like how some of these altcoins have made a lower high. Bitcoin, bit of a correction here as well. Still remains in bullish trend. Would like it to come a little bit lower down before adding again. And then the only thing that still does not care, the honey badger of the market, is Bitcoin miners. They just they don't know what going down is. So that's pretty interesting there. But yeah, when it comes to the Russell 2000, Qs, SPX, all these things that we've been talking about have been, kept pushing at the top end of the trading range on lower volume. It's not surprising that we're having a bit of a rejection here. And it's not really that much of a rejection at all. So there could be some more downside to go here. I would not be surprised. But when I say downside, I mean, a minor correction to the low end of the trading range, which would be a buy signal, obviously. So, yeah, was buying a little bit more of Google today, some other select tech. You had a pretty decent opportunity in consumer discretionary today, and that is pretty much all I'm seeing in terms of opportunities here. But really, the big change this week, and this is probably the biggest development for the past month or so, and that's a bullish dollar. So just went bullish in our model yesterday. So fresh trend change from the dollar. When taking a look at bond yields are having a little bit of an acceleration here. They've kind of just stopped going down, and it's having a tough time getting below 4%. And so it seems like even though the Fed is dropping rates, actual rates like the 10-year are a little bit capped. So that, along with the yield curve, still doing what's called a bull flattening, which is when the 10-year yield drops faster than the 2-year yield, or the long end of the curve is falling faster than the short end of the curve. That's typically a signal of slowing growth or inflation, combination of both. But I think it's trying to price in slowing growth, because when we take a look at some inflation gauges, which my preferred one, as you guys know, is the 5-year break-even inflation rate. That's actually had, ever since last week on October 3rd, the 5-year break-even inflation rate has actually accelerated by about 3%, right? So almost 8 basis points, which is, not the direction that the market wants it to go in, right? Essentially, the 5-year break-even inflation rate hasn't changed much since mid-May, right? Kind of around that 2.4%, which, that is close to 2%, but it's not 2%, right? So, maybe that'll be accepted. But from here, if this actually did make another run up, that would not be good. But if it ends up just kind of going sideways from here, then you can still have markets go up, right? Because the whole thing is that the Fed is trying to be accommodative, and they're essentially ditching their inflation mandate, even though they know it's above trend. They think that in the long run, meaning in the next, 2 to 5 years, that it's going to get, it's going to come down to that 2% level, which they just keep on moving the goalposts in terms of how long, right? Every single year they're like, oh, in the next 2 years it'll get down. Oh, in the next 2 years it'll be 2%. Whereas right now, inflation is at 2.8%. and rising, which it looks like it's going to be rising for the next couple months. Still, though, we're seeing a what the heck is this? Hold on 1 second. See if I can just reload it. Yeah, so as you can see here, they have headline CPI going up to 3% in September. So this next CPI report, we're not sure if it's going to come out next week because, we're going into trading day number 7 of the government shutdown. And so I mean, it's still having inflation remaining pretty sticky here. So it's just not being translated really into the markets because the markets are trying to get ahead of any type of slowing, and it's essentially suggesting that the Fed is going to still be able to achieve a soft landing, which, I mean, we're definitely, as far as like the economy that contributes the most to the markets, it's definitely not in recession, right? So for those of you that don't know, we are a service-based economy, but 20% of that is from, or the majority of it, half of it, is from only a very small percentage of consumers, right? So essentially the top 20% of income and wealth earners in the United States contribute to over half of the entire, GDP number. And so with that being said, the government really tailors to those top earners and top wealth holders. And as long as they're doing good, it's not going to be an aggregate recession. So, but this will be a pretty quick episode, as there's not really much going on except for that quick correction that we saw today in gold miners and silver miners, as well as gold, palladium, platinum, all these things that have been up a lot. Things don't go up in a straight line, so it's not surprising that we're having a little bit of a correction there. Still, though, when taking a look at trends, gold is way ahead in terms of the strongest trend. And then you have the Russell 2000, and then Bitcoin, and then S&P 500, emerging markets, commodities, and then the dollar, and then oil remains bearish. All right, let's go ahead and get into some questions that you guys might have. Hope everyone is having a fantastic day wherever you are. Thoughts on BSV? Let's see, short-term bonds. So this is talking about 2-year. Well, same thing if you wanted to buy something like the SHY. And so, the 2-year bond yields are in a bearish trend, which means these bond ETFs are in a bullish trend. So yeah, I mean, this is a dip to buy right here. So long as yields continue to come down, which it does look like that's going to happen. Jamie.wall, appreciate the follow. Let's take a look at some of the TikTok comments. All right. Let's take a look at YouTube here. What's the trading range of Microsoft? Let's take a look here. Microsoft is in a bullish trend. If we take a look at the ranges here. There you go for Microsoft. So it's kind of in the middle right now. Still would like to see it come down a tad bit more. You are seeing volume start to drop off on this price decline, which is good news, right? That's a bullish divergence. If prices are going down on lower volume, that's a bullish divergence. But ideally, you would like to, if you were to try and get it perfectly, you would want it to be closer to the low end of the trading range. So, this might be a good spot, though, to add. You don't necessarily have to wait for it to go down exactly to the low end of the trading range. But you know, that's ideal. Thoughts on Meta? Yeah, I mean, Meta is actually um, one of the few mega caps that's actually in a bearish trend in our model. And so it's having a little bit of a pop here. Market's about to close in about 30 seconds. But it's having a little bit of a pop close to the top end of the trading range. It still remains in bearish trend, so you know, it could be a short opportunity. We'll see. Could oil bearishness be accelerated by the lasting Gaza ceasefire because there's no longer threats to tankers in the Strait of Hormuz? Um, I'm not I'm not really a geopolitical expert, so you know, could have an effect. It sounds like that would possibly be a supply shock, but what I do know is that oil remains in a bearish trend, and so I'm not buying it. When it comes to like reasons why things are happening, your guess is as good as mine. All I can do is take a look at what the price charts are trying to price in, because again, you know, you can almost front run a lot of the news by looking at the price charts, and when you notice a lot of different correlations as well as the trends, then you know that's typically the market's trying to price in signals that it can do way better than you and I. So it's just pattern recognition and trying to see, okay, if oil's doing this, then what's the dollar doing? What's gold doing? What's Bitcoin doing? What are the Mag 7 stocks doing? Small caps, you know, different factors all at the same time. You have to look at all those things, and that'll paint you the story. But yeah, I'm not touching oil. I'm not buying it. Can you look at communications? Yeah, communications remains bullish. And let's see. It has lost some strength, but still bullish and pretty close to the low end of the trading range right now. So, and volume has been declining on that, so that's good. Yeah. As far as its correlation to the dollar, let's see. XLC. Right now, it currently has a negative correlation to the dollar. It's not like super negative, but pretty negative. So, you know, it's definitely, since the dollar has been rising, XLC has been, you know, losing some strength here. So, if you do see, if it still maintains a negative correlation and then the dollar keeps ripping from here, that could be some headwinds on the communications sector. How do you feel about government investing in companies like LAC? Well, I mean, I don't really have too many feelings about it. I try and leave feelings out of investing as much as possible. But if you're asking my opinion, I don't really have an opinion on that. I mean, it's more of like a fundamental speculation. So who knows? Remember, this is a macro channel. And so if you ask about micro questions like, what do you think about this, you know, thing that's happening in um, the Strait of Hormuz, or you know, what do you think about, you know, government investment in this AI company? It's like those are like micro fundamental questions, which those are important. Don't get me wrong, but I don't necessarily cover those on this channel. It's mainly like zooming all the way out and looking at the entire macro environment. Um, and the reason being is because a lot of those questions that you guys are asking about the micro, it's not that they don't matter. It's just that when you're using a global strategy like this, you know, by the time you figure out all that, it's like the next trend has already started. And, you know, we're in this to make money, not nerd out on, you know, what's actually happening in the micro. Again, not saying that's not important. You definitely need to know, especially with specific sectors. Um, but yeah, I mean, you can just look at the price charts and kind of figure out what it's trying to say. I saw the dollar lost value by 10%. You're talking about purchasing power? What do you mean? It's been bearish for the majority of the year. Is Bitcoin bullish? Yes. Can you run through correlations? Isn't bullish dollar positive for stocks currently? It's not positive. It's just neutral. So yeah. So the dollar right now is almost exactly neutral to the S&P 500. So again, a bullish dollar shouldn't necessarily have any issues for the S&P 500. Um, if this starts to go back down, as if this starts to go back to negative correlation as it's rising, then yeah, then it could be headwinds. But really, the rate of change for the correlation between the dollar and the S&P 500 has been going from negative to positive, which is a positive rate of change. So yeah, it doesn't really look like the dollar is a threat to equities at the moment. Is a trend that has just gone bullish stronger or weaker than a more mature bullish trend? Um, it depends on the strength, it depends on the percentage of, it doesn't really like the strength of a bull run or a bullish asset isn't based off of the amount of time it's been bullish. It's based off of the strength of that bullish trend, right? So it doesn't really matter if it's new or old. Um, I do like it. I do like if you've had, more um, a more mature bullish trend definitely gives you more confidence, right? But if you're trying to make a big score, then yeah, those newly formed bullish trends that really, show that it's a strong bullish trend, those are the best because you make the most money off of those. Like for our team, that's what we saw in Bitcoin miners, which, that signaled bullish trend all the way back in mid-May. And then ever since then, it's up like 200%. So that's one example. So yeah, part of the group, by the way, for our macro investing community in our partnership circle, um, we actually go through and give you a list of all those different trends, all those different either stocks, ETFs, cryptocurrencies that are going from or just went from bearish to bullish that have the strongest trends. And so that way you have those like right in front of your face, right? Because that's really how you win a lot is catching those early bullish trends. You're not going to catch the bottom, but in our group, we're not trying to call tops and bottoms at all. What we're doing is trying to confirm trends and position our money so that it has the highest probability of winning more and losing less. Because it's all about probabilities. It's not like investing in the markets, as you know, is not about guarantees. Just like if you are counting cards with blackjack at a casino, all they're doing is giving themselves an edge, and then they're actually playing the game, which means they can actually lose hands of blackjack. But over time, using this strategy, they are going to have an edge and end up over the long term making a lot of money, right? And so that's exactly what we're trying to do with our process and our strategy. But good question there. That was probably one of the best questions we had all week. Who said that? Nobuki Endo. I'm totally not pronouncing that right, so I apologize. Is it time to start cashing in some gold gains? Cashing in gold gains should have been over the past few days when it was pushing all-time highs. Now would be a time to then take those gains and buy some back because it's red. You don't sell when things are red. You sell when things are green. You buy back when things are red. Could you explain why Euro is down the past couple weeks while the Fed is cutting rates? Yeah, I mean, it doesn't really seem like the dovish Fed policy is doing much in terms of like Forex. Because it's weird, right? The Fed is signaling that it's going to cut rates, yet the dollar just did this. So sometimes the narratives get crushed and it doesn't work. Are you bullish on gold still? Of course. It hasn't broken trend at all. Gold has like 40 up days, and then one day it has a red day. You're like, is it bearish? No, it would take a lot for it to go bearish at this point. Is gold bearish? It would need to really crash from here, which I don't see happening. Could have a correction. I would like to see it do another repeat of what it did here. Or maybe, from here, maybe it just like does one of these. And then before it does another one. I wouldn't mind that. Have a nice accumulation phase all over again. I'm sure that'll happen at some point. Yeah, appreciate the question. I'd like to retract my Baba question. Yeah, I mean, we can check it out, but it still remains in bullish trend, though. I mean, it might be a good time to buy it, to be honest. It's right at the low end of the trading range. Volume has actually been picking up on this sell-off, so I might want to hold off a little bit. Let's see. Looks like volume has continued to go down. Yeah, this might be a good time to buy some. See how it went right to the top end of the trading range and then went right down to the low end? That's what you want to see. Look at the 1 hour chart. I don't necessarily look anywhere closer than the 1 day. What's your stance on RRP reverse repo collapse? I mean, it's already collapsed. There's only 4 billion left in it. It's basically already collapsed. So stronger correlation to Bitcoin, emerging markets, and gold there. You're talking about this? This is versus the S&P 500. So, yeah, emerging markets, gold, and Bitcoin have the best positive correlation right now, and equities. Appreciate the follows. All right, everyone. Well, we are approaching 4:15 here. We're going to go ahead and call it there. We don't do any daily macro updates on Fridays, but we will be back on Sunday for the Sunday macro wrap up. That starts at 8 p.m. Eastern time. Until then, good luck out there, and we will catch you on the Sunday macro wrap up. Bye, everyone.